With world-class expertise and local insight, Dexus creates value not just for today, but long into tomorrow.
From Barangaroo Studios, the AusBiz COB is the key stuff you need to know about the day in business and finance.
G'day and welcome to the COB on this Thursday. I'm Andrew Gagan. Great that you can join us as we wrap up what is a shortened week, even shorter one next week, of course. And, well, we finished very well. Currently up 0.75% as we settle on this Thursday. So very impressive, particularly bearing in mind where Wall Street finished was sharply negative off the back of what we heard from Nvidia. Obviously taking a big hit as far as it's selling its chips to China is concerned, and also the market disappointed what it heard from Fed Chair Jerome Powell too, that he's still in wait and see mode. So no sign yet that they're prepared to move further on rates. Well, just taking us to our themes of the day. Good Thursday. Well, yeah, of course, that's ahead of Good Friday, but it has been a good Thursday as far as the market is concerned, given we're in the green, and in the green for the week, in fact, currently up about 1.3% on the ASX for the week. That takes us down to just over 4% off the highs of last year. Black and gold. Well, that refers to those commodities. Oil prices doing well, lifting the energy sector. In fact, the energy sector was the big driver of the local index today. And gold, yet another record. I think it's 25 record gold price movements we've seen since the beginning of this year. And more of that interest rate puzzle revealed today with the latest jobs numbers. Perhaps some economists scaling back their supersized predictions of a 50 basis point rate cut at the next meeting, more settling on that 25 basis point cut expected when the RBA meets in mid-May. Just catch up with some of the top corporate stories today. Now, more quarterlies out. BHP reaffirming its production and cost guidance after booking record copper and iron ore production over the past 9 months, but has come off over just the past 3 though. Lithium miner PLS reaffirming its guidance and notably its cost guidance despite those costs rising in the last quarter. South 32 reporting it's on track to meet production guidance across operations except for its Cannington mine, and Santos reporting a 7% fall in first quarter sales revenue. Meanwhile, AMP's assets under management falling $1 billion from the previous corresponding period. But all those stocks well and truly in the green today. Elsewhere, Woodside is confirmed it's in discussions with Uniper regarding potential LNG supply. Insignia Financial extending the exclusivity period for bids from Bain Capital and CC Capital Partners by 4 weeks at the request of those bidders. And Clarity has received $11 million in R&D tax incentive refund. It's one of the best performers on today's trade. All right, so let's get to those sectors that are moving. I was mentioning energy, pick of the bunch. It's just checking again on the ASX. In fact, that whole sector up more than 3.5%, led by the likes of Woodside there, as we did see the oil and gas prices move higher overnight. Elsewhere, the miners are doing well off the back of some of those quarterlies we've seen, and the subsector of gold. Well, no surprise they have moved higher yet again, although Newmont just coming off a bit along with Regis there, but more records for many of those producers as a result of bullion hitting its another record as well. And the REITs also in mostly positive territory today. Well, let's unpack it. Mathan Somasundaram joining us from Deep Data Analytics. Mathan, welcome back. Look, not a bad way to finish this shortened week. I'm sure you would agree. You're perhaps a little surprised that we've made these moves, given we've got 4 days off. Anything can happen in that time, particularly in terms of Donald Trump, and also given where we saw Wall Street finish.
That's exactly right. I don't think anybody had being positive today on their bingo cards when you look at US market down 2%. But these market times are quite fascinating. I mean, there's so much movement. In today's Aussie market, nearly half the index move was just CBA. CBA added about 20 points to the market. So if you assume that CBA should have been down with what the overall market is, we probably would have been negative. So we have weird times. We had global funds basically defending our market. If our market was down similar to US, which is usually the case, we would have had a negative short week. So the fact that we finished positive kept us into the positive for the week. Now because we had two negative weeks, they were trying to break the trend and it kind of played out. And also we had option expiry playing out today, so there's a bit of turnover. But in saying that, the turnover for the day is very low. So the global trade through the pipes were the dominant player in the market.
It's also mentioning their energy, obviously, excuse me, doing well today. The likes of Woodside, of course, they have been whacked in more recent times. How are you looking at energy at the moment?
I like it. It's literally bombed out, as you said. It's been in every part of energy. It's irrelevant. It's been hit as if recession is on the way, while the rest of the market isn't. Energy has been really the only value sector for a while. So we've added at least one energy exposure into all our models over the last number of months, purely because of risk management. If the risk in energy sector is everyone is assuming that things will be okay. If that's the case, energy should bounce. And given that nobody is in energy, there's a short squeeze coming. The other argument is if energy remains weak as where it is, well, supply will come offline. And even if demand doesn't pick up, the lack of supply will squeeze the commodity price higher. So net, I think the risk return is pretty positive for energy in the medium to long term. Short term, it could do just about anything. It could go to zero for all I care. We're still fine with it. But the big play is gold. And that's been our dominant play. We've had 30-40% in gold for a number of years, and we are not changing our mind. This is going higher and even higher as policy mistakes pile up.
So are you adding in gold?
No, we've got a massive overweight and we have not changed. We haven't taken a profit on anything. We're just sitting back. We've tripled our money in Evolution. We've tripled our money in Northern Star. Regis gone through the roof. Gold Road is running on a takeover on top of that. And Vault Minerals, which is a merger of Silver Lake and Red 5, that's breaking out as well. So we're more than happy.
I'm sure you are, given those returns that you've seen. Also, Nathan, obviously some more quarterlies out today with some of the bigger miners, BHP among them. What's that telling you in terms of production? I mean, of course, the key is what's coming.
Yeah, that's right. We're forward looking, not what's happened. Quarterlies are backward looking. China data was very solid last week, and we've seen a stronger than expected GDP, very strong retail sales data. And the important part about it is the fact that it had a strong retail data with almost no inflation. And so the Chinese government has been targeting to move the economy more towards tech and consumer spending driven. And it seems to be working. Whether you believe the data or not, I mean, nowadays, every data that's coming out, even in the Western economies, get restated quite a bit. So you take what you can from it. But it's showing pretty solid stability into a trade war. And so in that context, I think China looks pretty solid, at least stable for now. And on top of that, that's not driven by any asset bubble. So they're not consuming a lot of commodities to do that. So if that is the trend that they're going towards, I suspect that we'll be holding up, China should be holding up okay. And during this trade war, China has been proactively organizing alternative sources for things that they was going to face tariffs. So in that context, they shouldn't face too many issues where America is going into a trade war with every man and his dog, and they don't really have alternative supply organized. So there's issues there. So in that context, for us as an economy, we're more aligned to China, and that looks stable.
How are you viewing the Aussie economy at the moment, Nathan? We did get that read on jobs today, remarkably holding up still at this point. But once again, these are reads prior to those tariffs coming in.
Yeah, I mean, I don't think the tariffs are a huge issue for us per se. It's more what happens in China and that flow-on effect. At the moment, China is not going gangbusters for commodities anyway, so I don't think it's going to make change anything dramatic. The $15,000 job creation in Australia is actually really strong, because if you put it in a like for like population adjusted to US, you're pretty much saying somewhere around 200,000 and a non-farm payroll number for US. That's a solid number. So for Australia, employment is still very, very strong. We can argue over the dynamics slightly here or there, but overall, it's still very strong. Unemployment is 4.1%. It's jumping around. That's historically low. I mean, we shouldn't even worry about unemployment till it gets about 5%. Historically speaking, that's where it is. So there is no, I mean, we've already seen both major parties offering handouts to the property market, which is the biggest religion in Australia. So, in context, there's no issues with the property market. There is zero issues with employment at the moment. Sure, we might get some weakness, but when has RBA been good at predicting that cycle when globally we are seeing strong employment market because lack of workers? So, in that context, I think good property market, good employment market, RBA cutting rates is going to be tough. And the Fed last night pretty much said the tariff war is going to raise inflation. They're going to wait and see. So the rate cuts in from the US Fed is going to be wait and see how that plays out. So even the cuts are under question. So RBA is in the same boat. I don't think people are getting overly excited about multiple cuts coming. Once the election is out of the way, I think things will be changing quite dramatically.
All right, you said it. Looking perhaps the next catalyst of those major market moves. Nathan, thanks for joining us in Deep Data Analytics. Enjoy your Easter break.
Thank you.
Let's now turn to our stock of the day. Now, it was BHP off the back of its quarterly update. We got the assessment from Andrew Coleman from Team Invest and Adam Dawes from Shore & Partners.
I'm not a big fan of owning mining operations because I think they are far too inherently cyclical to give you the kind of stability that you want to generate long-term compounding returns. Having said that, if there is a miner that you want to own, it's BHP, with the fact that it clearly is not only the largest in the world, but right at the bottom of the cost curve, giving it a significant competitive advantage. Trading at a PE of 10 at the moment, it's sort of well within its long-run bottom quartile. And so for me, I'm going to put it a reluctant buy.
These guys are looking 20 years out. They've got a very structured approach to what's going on. Some of the other things that they didn't mention there, nickel output was down 88% year on year. So that's certainly an area that they've obviously got to keep working on. And nickel has been a tough one. We've seen mine closures and company closures on that. Coal output was down, but copper up 10% year on year. This is fantastic. Copper is one of those metals that is going to drive BHP. They've got one of their largest Escondida mines, one of the largest in the world.
So let's catch up with those market movers today as we check the boards again. Clarity Pharmaceuticals, it has received $11 million in R&D tax incentive refund, helping boost the stock up more than 13% today. Also, we got an update from Challenger. Those energy stocks also very much in the green, off some updates and also just where those oil and gas prices have gone over the past 24 hours or so. On the negative side, Zip and Nuix, largely following what we're seeing more on global markets at the moment, and WiseTech among those stocks too. Domino's also off today as well. And small cap land, Meteoric Resources, meteoric rise today, up some 23% thereabouts. Ostra Materials also similar gains there, along with the Gorilla Gold Mines. Hard to escape that gold space at the moment, given what's going on more broadly. BrainChip also on that list, up almost 16%. And negatively, though, Tourism Holdings. We did get that was a broker mover too, I think, there in terms of what we're seeing. But obviously, tourism under some pressure. What we're seeing more globally. Serco and Genetic Signatures among the fallers today. Checking on what is out overnight, the European Central Bank expected to cut rates by another quarter percentage point to 2.25%. We also get a read on US housing starts and building permits, which are expected to come in lower. And ahead next week, now bearing in mind, of course, a shortened, even shorter week here in Australia, given we've got the Monday holiday, plus Anzac Day at the end of next week. Wednesday we do get the S&P Global PMIs, factory and service sectors also we're expected to expand there. Quarterly reports, among those, Woodside, Paladin and ResMed. So let's wrap it up, see where we've finished, to be up 0.75% on the CBO 200. And on the ASX 200, we're up a similar amount, almost 0.8%, to be up almost 1.5% over the past 5 days. In fact, not a bad way to head into Easter. So, enjoy your break. We will join you again on Tuesday. Thanks for watching and listening.